step to winning isn't easy. Do you make too much money to file a claim for residual long-term disability benefits? My office recently got a call from a physician who had a long-term disability policy. He became disabled, but he was still earning an income working part-time. He had never filed a residual disability claim, and he wondered years after the fact if he could file a claim. It seems that his physician buddies on the golf course who decided to play disability lawyer instead of practicing medicine told him he was making too much money to file a claim for his residual long-term disability benefits. As a result, he left lots of money in the pockets of the disability carrier. Now, as time passed and his disability progressed, he had to reduce his hours and stop doing the more lucrative medical procedures that was the bulk of his income. He finally questioned the advice that he had been given by his friends on the golf course. And he was stunned to learn that he was eligible for residual disability benefits. Now, this came as a surprise to him because he had never really read his disability policy or plan. Do you know what's in your wallet? Do you know what's in your disability policy or plan? His doctor buddies didn't know what coverage he had purchased. The buddies probably thought he had a straight total disability policy that only paid benefits if he was unable to work in his occupation as a physician. But what they didn't know, and what he didn't know, was that he had a residual disability policy that would pay residual disability benefits based on his lost wages. So what is a residual disability policy and how does it pay benefits? Many residual disability policies will start with a determination of what's called before monthly incomes. It's called BME, or there are other abbreviations for it, but that's the term you're looking for in a disability policy. Now, the number might be the highest earnings that you've had in the last 2 years, 2 years out of the last 5 years, or even earnings that you had the year before the disability began. Now, you can already hear involves a lot of math. But let's say that the average number was $200,000 per month. Residual disability benefits typically have what I call a ceiling and a basement. And that's how we calculate benefits. So many disability policies will say that if you earn 80% or more, in this case, $160,000 per month, you aren't entitled to benefits for that month. That's what I call a ceiling. How about the basement? If you earn 20% or less, then you get paid 100% of your benefits as if you were totally disabled. So 20% in this case is $40,000. If you earn less than $40,000, you would obviously have whatever money you earned, and you would get 100% of your total disability benefits. Now, in between the basement and the ceiling, benefits are calculated monthly, and what you get paid each month depends on the formula that's found in your disability policy and what you earn too much. Now, you can earn too much one month and not be entitled to residual benefits. In fact, I've seen AIG policies that say if you go 1 month without being paid residual disability benefits because your earnings are too high, your coverage is gone poof. Gone poof. Okay? So long as your disability is causing the loss of income, you generally are eligible for residual disability benefits. Again, you got to look at your policy. What do? Well, we have to gather all the monthly profit and loss statements, the tax returns, and other financial documents. Because first, we have to calculate this before monthly income number. That's the number against which, as I've said, each monthly earnings, post-disability earnings, are measured. So then we have to analyze each month's financial records. We create a spreadsheet by month and year so our client could see the money he left on the table. And guess what? He was stunned. He was even more stunned when we filed this residual claim and the carrier paid him the residual disability benefits that were due to him. The lesson is simple. Don't rely on the advice of friends, family, accountants, financial planners, or lawyers who don't specialize in ERISA or individual disability law. It takes a skilled and experienced lawyer, an ERISA lawyer, to read a policy, understand the terms, gather the necessary financial documents to calculate the before monthly income, analyze the post-disability financial information and medical records for causation, do the calculations, and submit a winning claim for residual disability benefits. So what's in your wallet? Are you missing residual disability benefits? Let's take a break.
Are you a professional with questions about your individual disability policy? you need the Disability Insurance Claim Survival Guide for Professionals. This book gives you a comprehensive understanding of your disability policy, with tips and to-dos regarding your disability application that will assist you in submitting a winning disability application. This is one you won't want to miss. For the next 24 hours, we are giving away free copies of the Disability Insurance Claim Survival Guide for Professionals. Order yours today at disabilityclaimsforprofessionals.com.